Happy New Year, everyone. Welcome to Business Morning. I am Bisi Adebayo. Trading under the African Continental Free Trade Area begins today, finally, after months of delay due to the coronavirus pandemic. With a market of 1.2 billion people now, the commencement ushers in a new economic era for the continent. According to the African Union, the trading phase under the treaty has been signed by 54 out of the 55 African countries setting the pace, with the market valued at $3 trillion. The treaty has the potential to generate a range of benefits through the economy of scale, trade creation, structural transformation, productive employment, and poverty reduction. Also, President Muhammadu Buhari is reiterating his resolve to revamp the economy through the National Economic Diversification Agenda. In his New Year message this morning, President Buhari mentioned that his administration is undertaking a series of special intervention programs to boost job creation and engage the youth financially. Let's take a listen.
Focus on revamping the economy through the National Economic Diversification Agenda that supports the primary goal of national food self-sufficiency. This has helped reduce the growing food-related inflationary figures and have in considerable measure positively impacted on our food security status during the long months of the pandemic lockdown. We are also currently rebuilding our national infrastructure base and in the process, introducing transformation through the rehabilitation, modernization, and expansion of the railway system, national roads, and bridges both in rural and urban centers alongside the airports and seaports. The reforms we have put in place in the power sector would guarantee increased efficiency in our drive to significantly expand the generation and distribution of electricity for use in homes and factories. As an administration, we are currently undertaking a series of social interventions designed to boost job creation and support the entrepreneurial drive of our youth. With the recent opening of our borders, we expect that the pent-up demand of legitimate cross-border and international trade will boost the fortunes of the many small businesses and agricultural enterprises that depend on Nigeria trade and commerce. The message to our West African neighbors is that Nigeria is once again fully open for those willing to conduct business in a fair and equitable way.
President of Nigeria, Muhammadu Buhari. Well, let's get reactions to the president's speech and, of course, a review of 2020 and an outlook for the new year 2021. And I'm being joined by the CEO of the financial derivatives company, Mr. Bismarck Rewani. Good morning, Mr. Rewani. Happy New Year, and it's good to have you on the program. First, let's begin with your reaction to the president's New Year's speech. Does it show enough convincing optimism for the new year?
I think the president has a responsibility to the citizens to reassure them of the direction of policy, to also to tell them the consistency between his aspirations and the goals that he has set and the actions that have been taken. And I think he did that. But let us go to exactly what was more important than anything else, which was that in his budget, in signing the budget of 2021, which was done in 2020, he made a very important remark, which was lost on many. That is, that if the oil prices move in any direction, if there's volatility, that he would have no hesitation to present a supplementary budget which will capture the volatility that is built into the markets. In other words, for the past 20 years or so, we've had only about 2 supplementary budgets. This time, and one was last year because of COVID. This time, if oil prices were to increase, he would have no difficulty in actually increasing the amount spent. And if oil prices were to decline or there were other shocks, he would have no difficulty at all in actually adjusting the budget to meet the reality of the time. I think that's the most important thing, the flexibility and the determination. Determination to ensure that there's growth, determination to ensure that poverty is tackled head on. But more important is that if there are changes, he is willing to make changes. I think that's the message I got from that broadcast.
All right, let's talk about the budget and the finance bill that was signed into law yesterday. What are your expectations now?
Well, the budget is it's an estimate of expenditure and revenue, but more important is a tool of management. To the extent that the deficit is higher than the previous deficit, means that the government has accepted what we call the Keynesian counter-cyclical model, which means that you spend more than you earn when there's a recession, and you spend more than you earn, especially when there's stagflation, to jumpstart and to prime the economy out of its current lull. So that is one. But a budget is of no use if you do not implement it strategically and effectively. So what is going to happen is that this year, analysts are going to be watching how well and how effective the government is spending and what impact it will have on the ordinary man. What has happened so far is the revenue profile of the country has improved, but it has not translated into impactful spending on healthcare, food development and agricultural development, and education. So education, healthcare, and transportation. But it's also, we are now beginning to see signs of improved infrastructure, especially in rail, pipelines, and roads, and seaport management. So all of those things will translate into, one, creating jobs, and two, actually increasing the productivity of those who are working. But it's going to be a very tough assignment for those in the budget office and those in the Ministry of Finance as well.
Yes, you talked about a very tough assignment now, and let's talk about funds. The president had hinted that fresh borrowing plans would be sent to the lawmakers for approval soon. Looking at the cost of debt servicing for the country now, how does that sit with you? Is there any other way out?
No, there's no problem with that. As far as I'm concerned, when there's a recession or stagflation, you borrow, but you must invest in targeted project-specific borrowing, which helps to increase productivity. So if, for example, you borrow to expand the Lagos-Ibadan and Abuja-Kaduna into standard gauge rail and people are moving in both directions, both goods and people, you'll see there'll be increase in productivity, there'll be new investments around the right of way. And if you invest in pipelines, you'll find that you reduce the number of trucks on the road, and the kind of traffic we had this morning in Kara Bridge, which we were a victim of, you will not have that because the roads are clear, the people are moving, and effectively you are having, you will increase what we call the total factor productivity of the country, which means our capital stock is being used efficiently. I think that's very important.
All right. Now, so before we begin to speak about what to expect for 2021, let's look at what happened in 2020 in Nigeria. It was quite an interesting year, let me put it that way. But can you take us through the good, the bad, and the ugly events that shaped the year?
Yes. Again, people say 2020 is a year that we rather forget than to remember. But also, the reason why we have to remember it is that what lessons are we going to learn from 2020? But in 2020, Nigeria had at least, I would say, there were 12 good issues, and I will take them one by one. Nigeria is the 31st largest economy in the world, and that's what the data shows. It also is the 31st largest industrial output with $102 billion of industrial output. That was good. It's the 5th largest agricultural output in the world. It has $84.2 billion of agricultural output. Nigeria remains the 2nd largest producer of roots and tubers, that's yams. So next to China, we produce 115 million tons of yams. And even though we don't export it right now, but there's a lot of potential to do that. We are also the 5th largest producer of vegetables in the world. So let me correct it. We are 2nd largest producer of yams and tubers, and we are the 5th largest producer of vegetables in the world. Nigeria, Lagos is the 17th largest city in the world with a population, according to the United Nations, of 13.5 million people. Depends on what you believe. 4 of the 16 fastest growing cities in the world. Number 3 in the world, fastest growing city in terms of population is Nnewi in the southeast, in Anambra State. The 2nd fastest growing city in Nigeria, but the 6th fastest growing city in the world is Abuja, which is growing at about 28.4%. Nnewi is growing at 29.6%. Abuja is growing at 28.4% growth in population. Uyo is growing at 28.3%. It's number 7, the 7th fastest growing city in the world. And Port Harcourt is the 14th fastest growing city in the world at 25.6%. So what does this mean? It means that people are migrating to these cities because there is economic activity there. And it also tells you that there's increasing urbanization and migration from even some of the urban centers to the others where there's activity. But look at those 4 cities. One is in the middle of the country, which is Abuja, the federal capital. We can understand that. But the fastest growing one is in the southeast, and the 2 others are in the south-south. So there's a change in the demographic composition. There's a change in the migration trends, and there's a change, and this is driven by economic fundamentals. So there's something to think about. Now, what are the bad things? There's some bad things that happen in Nigeria. Nigeria is the 13th highest refugee. Of all the people seeking asylum in the world, or refugees, Nigeria is number 13. It has 276,000 people who are refugees, where Nigeria is the 21st worst air polluting country in the world with a factor of 46.3. Nigeria has the 3rd largest rate of deforestation. That means we are cutting our trees, and that is all sorts of problems. In terms of life expectancy, Nigeria, for both sexes, Nigeria is has the 4th lowest life expectancy of 55.8 years. Sierra Leone is worse than we do. Our median age is 18, which is good, but if it's unproductive, then we have a problem there. It has the 11th lowest primary school enrollment in the world. Nigeria has 85% of children enrolled, so there's another 15% that do not go to school at all. So out of school children. And Nigeria has the 15th highest rate of inflation in the world. But those are the bad. Then the ugly situation, the ones that we'd rather forget. Nigeria has the 6th highest application for asylum. Nigerian, of all the countries where people seeking asylum in the world, Nigeria is number 6. It has the 9th largest number of households, which is not a bad thing, 40 million households. Lagos, the city of Lagos, which we live in, has the worst, it's the 11th worst infrastructure in the world with a score of 16.4. 100 is ideal and 0 is intolerable. Nigeria is the 4th country with the highest number of terrorist attacks after Yemen and Iraq. And it has the 7th highest death rate from poor sanitation. In other words, people that die because of poor sanitation. So that's the good, the bad, and the ugly. And that's what Nigeria is all about. I don't know if I've addressed that for you and the viewers at this time.
Actually, it's said a lot, talking about the good, the bad, and the ugly. But I want to just take you back, and that's talking about the rate of migration now. This is a new year. I mean, yes, we're all hoping for a better economy, yes, indeed. But are we likely to see a surge in that number? Talking about people migrating out of Nigeria.
No, I don't think so. You see, because of COVID and the vaccinations and all of these things, people are going to more or less stay put. Immigration is not going to be a critical issue, but I don't think, because all the economies in the world are going to be fixing themselves, we'll have some brain drain. A lot of Nigerians will still continue to go to Canada. But the solution to the problem is when you have investments in this country, once the economy begins to turn around, the urge and the incentive to go outside, it's not going to be that high because there are opportunities here. What we have today is multidimensional poverty, lack of opportunity, and that leads to hopeless people and helpless leaders. So we need to, but that's the problem. But the solution is that we've started making we've engaged, and we'll talk about that when we talk about the economy. There are certain reform policies that are put in place. The time lag between when you reform and when you feel the impact is not going to be as long as you think, because in most of these cases, we are talking about actually restoring idle capacity. And so you will see that it's not a light switch, but you will see that the economy begins to improve in 2021. And when that improvement starts, people begin to have hope. And as long as the leadership remains credible and know that the responsibility of leadership and government is to serve the people, which is what I think we are hearing from the president's speech. We must serve the people. The people are the masters and the leaders are the servants. That's what it should be.
We all know that COVID was not the only major health issue we dealt with in Nigeria in 2020. Of course, there were other health challenges, but the pandemic, just like it did so to every other country, dealt a major blow on the economy.
Yes, it is true, but that's the story of the world, right? When we had Ebola, it was confined to West Africa mainly and parts of Central Africa. And it was managed, we were confined, people were not allowed to travel out of these parts of the world. And it was specific and narrow. But the COVID is a global thing. Over 20 million people infected and so many deaths now. But when you come to Nigeria, either because of poor testing or because of some unknown factors, Nigeria has reported fatalities of 1,267 reported. Let us even assume that figure is 90% lower. So let us add another 100. So that means that we'll have about 120,000 or 200,000 people that have died out of COVID. But when you look at the next line there, malaria alone, in spite of all of the prophylaxis and all of that, is taking 300,000 people away, mainly infants and others. So malaria is even more lethal than COVID. But the point is that malaria is not contagious, right? You have to be infected, you have to be bitten by the female Anopheles mosquito. Now, yellow fever took an average of about 200 to 300 people, 172 they say officially, but I think I'll give it always add a factor of 10 or 20 to that. So maybe yellow fever took about 500 people. Lassa fever took 121, that we know specifically. And measles took slightly higher, but measles, because there's a vaccination and inoculation against it, then we have the measles, mumps, and the other one. So generally speaking, we have a healthcare problem, but because of good nutrition, because of healthcare investment, we are seeing a slight improvement, but we're still far below our peers like Ghana and others in terms of spend on healthcare spend as a percentage of GDP and the effectiveness of that kind of healthcare spend. But luckily, Ebola didn't take out too many people. Compared to South Africa, where you discount for testing and you do the population, the per capita infection rate, Nigeria is fairly okay. But again, I must caution that we are not fully aware of the full extent of the COVID impact. Anecdotally, if it was killing people, we would have known so many people would have died. But there's a lot of work to be done in the healthcare sector.
All right, Mr. Rewane, we'll still talk about the impact of the pandemic on Nigeria's economy, but that will be when we return in just a moment. We'll continue this conversation shortly. Just stay with us. Welcome back. I still have the CEO of Financial Derivatives Company, Mr. Bismarck Rewane, and we're reviewing the year 2020 and talking about an outlook for the new year. Now, before we went on that break, we were talking about the effect of the pandemic. Of course, we know that it affected practically every country, but what was peculiar about Nigeria's case? How do we compare with our peers?
Well, first of all, Nigeria, this is the second recession in 5 years. So the question is how vulnerable or how versatile were we to withstand the shocks? So obviously we're more vulnerable. People like Financial Times have gone to the extent of describing Nigeria as facing the risk of being a failed state. But what is true is that the economy is fragile, a fragile situation, and we had pre-existing conditions. So, but if you look at all the countries, almost every country it's a global recession, but that doesn't mean that you didn't have your own problems before then. So what Nigeria is doing is to use the opportunity of fixing the immediate and dealing with the fundamental, which was there before. That you go to the hospital because you had, you had a minor accident, and the doctor says, "Oh, whilst you are here, let us now take care of the appendicitis that was already rearing its head." So we're trying to use the opportunity to use one stone to kill two birds. But having said that, let us look at the countries. You find that Nigeria contracted -6 in the second quarter, but now to -3, which means that the level of contraction is reducing. But I must warn that in Q4, the contraction is going to be more than that. It's going to be more because there was NSAS too, because Q4 last year we grew at about 2.58% compared to this year, Q4, which is going to be much lower. So look at South Africa, Ghana, Kenya, and Ivory Coast. South Africa today is contracting by -6, coming down from -17 to -6. Ghana is growing at -1.1, and Kenya is -5. But the more important thing is the inflation rate. If you look at these 5 countries, Nigeria has the highest rate of inflation, which is 15%, and food inflation in Nigeria is 18.3%. Look at South Africa, 3.2%, Ghana 9.8%, Kenya 5.46%, and Ivory Coast 1.7%. But I want you to now look more importantly at the interest rates in these countries. Whilst Nigeria has an inflation rate of 15%, its interest rate on treasury bills are less than 1%. As a matter of fact, negative. South Africa has 3%. In all of these countries, the rate of interest is higher than the rate of inflation. And see what happened to the currencies. Whilst the Nigerian currency before now had contracted by -13, in fact, yesterday the currency went down by another 15 naira. So when you look at it all, it's done -25% this year. South Africa, on the other hand, South Africa's currency has appreciated by 22%. The Ghanaian currency stayed flat about -1.89, and Kenya -7. What does it tell you? It tells you that when you have interest rates that are lower than the rate of inflation, there is a tendency to desave. That is, your savings will drop, consumption will increase, and capital flight will increase. I think that the central bank has that clearly in their view, and they're going to be doing something about it shortly to ensure that national savings is mobilized. At the same time, you don't want to stifle industry and loans and intervention program, but at the same time, you need to strike a balance. What still is unemployment? Unemployment in the second quarter was 27%. That is going to increase to a minimum of 35% when you measure the third and fourth quarters. And unemployment in South Africa is 30%, very high. In Ghana, it's 6.8%, in Kenya, it's 10.4%, and Ivory Coast, 2.4%. So what is this telling you? It's telling you that, one, the pandemic affected all countries, but the pandemic is not an excuse to underperform. Two, that your policies must be consistent, and every patient has its own peculiarities. You can't just use one cut and paste and use one drug to treat all the patients. So for Nigeria, we have a stagflation situation. We have negative growth and high inflation. We got to sequence them. And when you're sequencing, you need to deal with certain things. We need to take care of inflation at the same time, first and foremost. And then you begin to deal with growth and unemployment at the same time. And we'll discuss what the policy response and policy action should be to deal with this as we go further into this program today.
Of course, we're discussing it right now because I'm throwing that question right back at you. That what sort of policy response do you suggest to move the economy forward with all of these challenges?
I think first and foremost, the president said today that reopening of the borders helps because 16% of Nigerian population engage in wholesale and retail trade. Trade is a function of two things. One, informal trade, which is cross-border trade, and two, foreign exchange availability. The central bank has yesterday made that bold move of actually bringing the exchange rate to close to its PPP value. It went from 395 to 410. And guess what? And we'll come to talk about that. the parallel market did not depreciate. As a matter of fact, the parallel market is beginning to appreciate. So one is making the adjustment. Two is maintaining the flexibility of the exchange rate. And we'll talk about that. So that's one. Two, opening the borders. So when you open the borders. And three, this, selling as much forex to manufacturers so that output increases. If output increases and there's stability of the exchange rate and there's flexibility of that exchange rate within a normal curve, you will find that all of a sudden investor expectations, consumer expectations, and policy makers' expectations will be aligned. When that happens, what drives inflation more than anything is expectations of shortages. If that comes down, then inflation begins to reduce. Investments begin to increase because of stability of policy. And then you begin to see an increase in growth. Growth, at the end of the day, is the main thing. Growth, without growth, we are all going to be poorer. And then coming after poverty is restlessness and hopelessness. And that leads to all sorts of reactions, which we don't want, undesirable reactions.
Well, I'd like us to dwell more on what the CBN actually did yesterday. That's talking about devaluing the currency at 410 to the dollar. Can you explain what this actually means in full?
Well, simply put, the word devaluation is an anathema in this country, so let's not talk about that. What happened was that the currency was adjusted in the market, because you have the official rate, which is still at 380. You have the investor and export window, where the bulk of transactions are done, where it went from 395 to 410. Essentially, by this time last year, that rate was about 358. Today, it is 415. So what has happened is that you've actually 55 naira to a dollar has been taken off the value of the currency. But this happened like most other countries. You are adjusting your currency in line with the weakness of your external sector. And the things that determine your currency value are in all about 7 of them. And they are on the slides. One is your balance of trade. Because your export minus your imports gives you your balance of trade. You'll see that in 2020, we had minus $6 billion. And in 2021, we are expecting to improve to minus 4.8 or minus, depending on how the oil markets go. So that is outside our control. It's what happened in the oil market determine. The terms of trade are the changes in the price of our exports relative to the change in the price of our imports. Our situation has improved from 24.4 to 25.4. So there's a slight improvement. Not enough to capture if you take the deterioration from 2018 to 2019, quite sharp drop from average of $68 a barrel down to about $45 a barrel this year, right? Our external reserves, gross external reserves, we call this, it's about 35.2. We expect it to depreciate by the time the central bank sells to the market and all of that. Let us take $5 billion out. So we end the year at about $28 billion, which is fairly robust for our country. But if you did this, you would have attacked and dealt with inflation on one hand and brought some kind of stability to the currency value and calm people's speculators' fears. The purchasing power parity value of the naira last year we put it roughly at about 408. And so the central bank moving into 410 means that they had the courage to do this. Maybe they should have done it earlier. If they did it 3 months ago, the parallel market wouldn't have gone to 500. But now it's better late than never. So we must give them kudos for that. Well, the parallel market, as of today, is trading at 470. It was 503, 505, came down. The more the central bank sold into the official market, the less volatile the appreciation in the value. My thought, I think that by Monday we'll see an appreciation. Why do I say this? I say this because if I have spent 410 naira to buy $1 in the official market, the amount of naira I have left to go to a parallel market to blend is less. So the demand in the parallel market will actually drop, and that will lead to an appreciation in the value of the naira. Not significantly, but at least directionally, the Naira begins to appreciate gradually. Then the I&E window is more robust and we are going to see a lot more activity. Don't forget our demand for foreign exchange as a country has actually reduced. The number of people flying out and flying in to Nigeria has reduced because of COVID. The number of people, manufacturers, there's a decline in their income because we are spending more money. We're spending 165 or 165 Naira or so on a liter of petrol, 161 Naira a liter of petrol. We're spending more on cost reflexivity in terms of electricity. We're spending more on certain things. We're paying more for VAT. So generally speaking, our purchasing power has shrunk, but for good reason. Now, the question is, what is the government doing with this money that has been raised, with this improved revenue? And like I said at the beginning, what impact? If that money is going to fix the Lagos-Ibadan Expressway rather than us spending 4 hours to get to channels this morning, we'll spend only 30 minutes. That increases productivity. If that is used to extend the Lagos-Ibadan rail all the way to Abuja, Kano, Kaduna, from Port Harcourt, that will increase productivity. It will create jobs while the people building it, and it will increase productivity. We expect to see that in January this month, when the president opens the Lagos-Ibadan rail, we'll see goods moving, containers moving. Rather than being stuck in Apapa, we pulled out to the logistics center in Shagamu and other places. So I think that the exchange rate move yesterday was a great move by the central bank. I think that it's not just moving, adjusting the rate, it is a flexibility. We have to now remain competitive. Don't forget, the US dollar itself has lost about almost 6 to 8% in the last 1 year. The Chinese currency, the Chinese have been accused of competitive devaluation. So a strong economy is not necessarily synonymous with a strong currency. But once your growth begins to pick up and your activity levels begin to pick up, your currency will, by implication, begin to appreciate in value. And that is where we are. We have no moral justification to ask that we want a very strong currency if our economy is fragile. So let's fix the fragility, and then the currency will follow. That's my view.
Now, on a broader perspective now, what are we to expect in 2021?
Now, 2021, first and foremost, like I said, like we can see on the graphs here, we'll have a W curve. That is, we came down, and then we're going to climb up. In the first half and second half of 2021, I do not think that we will see the kind of positive growth that we require. We will still be in negative growth, but it will be improving. But by the second half of 2021, my estimation and our firm's estimation is that the country goes into positive growth and sustainable growth for that matter. So from June, July next year, you begin to see all the positivity that you require in almost all sectors. And those sectors, there are 46 sectors that are monitored by the Bureau of Statistics. 17 expanded this quarter, 13 expanded in previous quarter. By next quarter or this quarter, you will see at least 25 of those activities expand. And those sectors that you should look out for: construction, manufacturing, trading, agriculture, telecommunication, education, a little bit of aviation, right? You would see, so trading, agriculture, and then again, financial services. You're going to be seeing that kind of improvement. So generally, this will be a tide that will lift most boats, but some boats are going to get to the top much higher and faster than others. So, and the sectors what is important to us is that the sectors that employ people. So the sectors that employ the most in this country: agriculture, trading, manufacturing, construction. So once those four sectors grow, then you begin to get jobs begin to come back. But don't forget that some of the benefits and efficiencies that have been extracted by virtual activity, from the benefits of the side effects of COVID has made us more efficient. We will not throw away those efficiencies anymore. So companies are going to be much more cost efficient. They're not going to increase their headcounts substantially. The banks are going to move in the direction of virtual e-commerce. Retail activity is going to be driven more from e-commerce rather than brick and mortar. So those are the things we are going to see in 2021. I think there are some game-changing, what I would call some game-changing activities, and we'll come to that in a minute. But generally speaking, we think that oil which drives the Nigerian economy, will trade between 45 and 50. With some luck, we got up to 55. But I won't bet on that, because two things will happen. One, the Iran nuclear deal will come back with Biden taking over, and therefore Iran will be able to pump more oil. So price of oil could drop. But even if it doesn't drop, at $50, $55 a barrel, the price of a liter of petrol would definitely go as high as 180, 190. But again, more people employed, more people at work, activity levels increase, incomes begin to increase, you will not feel the effect. So what we call the natural rate of inflation will go with the moderation of that rate will actually increase, and then we would see growth actually giving us greater output.
All right. While you were speaking, I could see the slide talking about the game changers in 2021. Of course, the AFCFTA is top on that slide, and it kicks off today. So talk us through in details the game changers for 2021, starting with the AFCFTA, which kicks off today.
Yes. Well, you know, the African Continental Free Trade Area Agreement is critical, because regional integration and big markets are the way to go. You know today, Brexit and the European Union. European Union, 27 countries. 20 years ago, if you went to Barcelona, you went to Madrid, went to Lisbon, right? Went to Milan, went to Rome. Those countries are virtually backward compared to the rest of Europe. What has happened because of the European Union, the customs union, the trade union, the common currency, and now almost a political union? You find that all of those countries have become, the standard of living in those countries, the economies are booming. They are doing well. Unemployment has dropped. So you find that big markets work. So the same thing will happen in Africa. In America, we have the North American Free Trade Agreement, NAFTA. We're having the same thing in Asia. Africa cannot be different. And when you come to Africa, you talk about the big economies, the 5 big economies: Nigeria, South Africa, Angola, Kenya, and Ivory Coast, right? Those economies are the ones that benefit more because of economies of scale and because of what you call large markets. So you'll find that people will come and set up manufacturing as long as you don't stop them prohibiting this and banning that. So it opens up the market and gives us a competitive advantage. Some sectors where we are not competitive will move away, but the ones that we are comparatively comparatively advantageous position will improve. So what do I see? I see that, yes, ratifying the agreement is one thing. The infrastructure bottlenecks, you cannot move goods if there are no roads. You cannot move refined products if there are no pipelines. So you're going to see that it will coincide. The Dangote refinery, the Dangote petrochemical, the Dangote fertilizer plant are one of the most efficient in the world, 45% more efficient than anywhere else in the world. You will see the Dangote refineries becoming the hub for West and Central Africa for refining. Cement manufacturing, you have the Dangote Cement Group, you have Lafarge, and you have Buharis. The African conglomerates will dominate this country, these things. You will have aviation where Ethiopian Airlines and Kenya Airways will dominate the African skies, right? You would see clinker being exported. You will see LNG. So in a matter of 5 years from today, with the African Continental Free Trade Agreement, there'll be movement of people, movement of goods, and movement of investments. Nigeria will benefit more than most other countries as far as this is concerned, because you have the population, you have the productivity, you have the skills, you have the people, and you have the market. I think those are important. That's on AFTA. Now, the other game changers, ECOWAS protocol. I do not think that we are going to adopt the ECO currency for now because the convergence criteria have not been met. But ECOWAS is important. We are the largest economy in ECOWAS. For Africa, we are 21% of GDP. In ECOWAS, we are 68% or 60% of GDP in the whole of West Africa. So we've signed the protocols. The borders are open. There'll be more flights. 20 years ago, there were only 2 flights, 1 flight a day between Accra and Lagos. Today, before COVID, we had 28 flights a week between Accra and Lagos, and another 10 or so flights between Accra and Abuja.
All right, Mr. Rwani, I'm sorry to cut you in there, but we need to take a moment. Of course, I'm going to take you again into the third segment, so please just stick around and hold on to your thoughts. We'll be right back with this conversation in just a moment. It's a final stretch of the program today, and we'll still have the CEO of financial derivatives company, Mr. Bismarck Rwani, talking about what to expect for the new year 2021. Thank you, Mr. Rwani, for sticking around. We need to wrap this up in just a few minutes, but then I want to get your thoughts on inflation. Of course, you're projecting a moderation for 2021. Plus, I would also like you to give us your final projections for the new year.
Okay, thank you very much. We were talking about game changers, and one of the things I talked about, I hadn't spoken about, was being our trading partners. We are now going to be buying more from Asia, where the currencies are weaker and where the quality of the products may be improving. But talking about inflation, and I told you, quite frankly, inflation is going to moderate. Why do I say that? Like I said before, opening of the borders, increase in output, and more disbursement by the Central Bank of Nigeria. But as we close out this program, I want us to talk about where will we be in December 2021? What is going to be happening to you and the viewers out there in December 2021? Said on the previous program here that by December this year, none of us will be wearing face masks. It's more likely that you, BC, and almost all the viewers here are vaccinated. It's also likely that you will be traveling to other African countries without visa requirements by December this year. 40% of our students will be doing virtual. Our universities will be open and everybody, but 40% of our activities will be virtual. And more importantly is that we are going to be having e-commerce trading. There are some risks that we run. One is that price of oil could drop. Two is that there could be insurgency and vandalism in the Niger Delta. There could be a reversal of policy initiatives, what we call ideological backsliding. There could be resistance to reform. There could be riots. Those are risks. But year-end projections, let me just end this. GDP will grow by 1.5% in 2021, as against -2, -3% for the whole year in 2020. Inflation will come down to 12% from the high of 16% by the end of the year. The exchange rate, we think that the parallel market would appreciate to 450, while the official market will converge somewhere in the middle somewhere. External reserves will come down to about $25 billion because we support the currency, and we will actually be having more what we call an auctioning system rather than just allocation of foreign exchange. The central bank will focus more on using policy to drive stability of the currency and stability of prices. The stock market, which is, in my judgment, is more of an asset bubble today, will correct itself and will be back from 20 trillion maybe to about 16 or 17 trillion at the end of the year, which is not bad because, in terms of earnings, the power output will improve. Technically, we should be doing 4,800 to about 5,500 megawatts distributed. And unemployment will improve from around 45 down to about 40% at the end of the year. So generally speaking, and in conclusion, the country will be in a better place, but a lot of work has to be done by the end of this year. And, what we say, God bless Nigeria.
Thank you, CEO of the financial derivatives company, Mr. Bismarck Rwani. We all hope for a better 2021. We don't want a repeat of what we saw in 2020. Thank you again, and Happy New Year to you again.
Happy New Year to everybody. Thank you.
All right, now let's talk about what happened at the Nigerian Stock Exchange in 2020. It was a very fruitful year at that market, but I won't be doing that myself. Edidiong Iwang is right here with us to take us through what happened in the markets last year. Good morning, Edidiong. Happy New Year to you.
Good morning, BC. Happy New Year to you. So I like the way you started with the markets. I'd just like to point out that 2020 started on a great note for the market, and it ended on a wonderful note for the markets. The year-to-date return was at 50.0%. Now, Bloomberg reported that's the highest since 2007. Currently, the market in Nigeria is leading other markets. Bloomberg says it leads about 93 other markets that they follow. So the market started on a great note and it ended on a wonderful note. The All-Share Index was up about 3.79% week on week. Now, we had just 3 trading sessions. It was really short, but it was wonderful because all 3 trading sessions ended on a positive note. Although volume and value declined, of course, that was because we didn't have enough trading days. We saw about 1.80 billion shares worth 25.96 billion naira traded in 14,634 deals. Now, 3 of the sectors we tracked were positive. That's industrial goods, which was up 10.37%, insurance was up 1.74%, and oil and gas was up 0.19%, while the banking and consumer goods were down about 56 basis points and 50 basis points. Now, the gains in the markets last week, or rather this week, were largely driven by industrial goods, Dangote Cement, Boa Cement. We saw some gains in Zenith Bank, in UBA, MTN Nigeria also drove the market during the week. But analysts say that this new year or this new week we're entering, they expect the bull runs to be retained in the market as investors take position for, end of year dividends and all of that.
All right, Adingo, and I know we could go on and on about how fruitful 2020 was for the investors, but I'm sure we'll do more of that next week when trading resumes. Thank you and Happy New Year once again.
I wish you the same.
Now let's travel to the UK, where a new era has begun after it completed its formal separation from the EU. But let's get more from Juliana Olayinka, who will tell us how all that is coming up the morning after. Good morning, Juliana. Happy New Year to you. Happy 2021. It's good to see you again. Now, tell us, finally, the UK has left the EU. It's been 4 years, 27 weeks, and 2 days after that historic referendum. But what's the mood like right now?
Happy New Year, Bissy. Well, it's pretty difficult to judge the mood because we're in a lockdown, and unless you go by social media, people are not really interacting. And to be honest, as I said, over the past couple of days and couple of weeks, Brexit fatigue in the country is a real ailment. People are sick to the death of it, but looking at news reports, it appears as if things seem to be going okay at the ports. The first few ferries have arrived from Calais to Dover, and things seem to be running smoothly. But of course, it is the 1st of January. It's a bank holiday here. It's typically quiet at the moment, so a lot of commentators and observers are just waiting for the dust to settle.
All right, Juliana, we'll wait to see how everything all plays out in the new year. Of course, we'll be seeing you again at 1:30, and it will be you and I again. So hopefully we'll have more details then. And that's where we end the show today. Thank you for watching. I am Bisi Adebayo.